A historic secret deal between the US and Iran just saved the global economy and sent the stock market skyrocketing on over 2% today. A 60-day ceasefire was triggered, $16 billion was released, and the critical Strait of Hormuz completely reopened. But is this sudden peace deal or retail traders being manipulated? In this today's post-market report, we are going to break down this massive news plus key market data. Hello everyone, welcome back to Stock Market Meridian. Today's date is June 12, 2026 and you are watching today's post-market report. After 3 consecutive weeks, markets are opened in huge gap up and closed at about 2% today. It's mainly because of war tensions cooled off and crude oil prices crashed. Exactly 24 hours before, there was high tension alerts were happened in Strait of Hormuz in exchange attacks of US and Iran, and also for each other has given warning to destroy. But suddenly, what happened don't know. Trump changes his tone and he cancelled all the attacks on Iran. With that news, yesterday crude oil prices crashed and US markets goes high. Then now, Iran is also cooling down and saying that they are also agreed to make a deal and ceasefire. Iran has officially confirmed a historic MOU with United States. According to the reports from MTAR News, US has committed to lifting its severe economic and oil sanctions, also withdrawing its military forces from around Iran and ending the tense naval blockade, most importantly for the global economy. This deal officially reopens the Strait of Hormuz shipping line. And also, MTAR News saying that US is releasing Iran's frozen assets. Iran is set to receive a massive $16 billion in funds over the course of upcoming talks. From Iran and US, both the nations are launching a structured 60 days negotiation period, specifically aimed at resolving outstanding nuclear issues and solidifying long-term peace. Also, both the countries are going to meet face-to-face on G7 summit next week for this deal related to talk. Slowly, this Iran and US war tensions are fluctuating more than stock markets. Don't know they are doing this intentionally or not, but retail traders are getting suffered. However, reopening of Strait of Hormuz can return off billions to the market, and that will heavily ease inflation and stabilize over global fuel supply lines. What was your opinion on these conflicts? Really, this war will end by this weekend or the same story will repeat? Please let me know in the comment section. Before getting into further video, remember that I upload pre-market video every single morning before market opens and post-market video right after the close in the evening. Please watch the full video, and if you think this video is informative for you, then subscribe to the channel and hit the bell icon. In today's market, there is news was getting viral. India's food safety regulator is taking aggressive action against some of the biggest names in the consumer market. The Food Safety and Standard Authority of India, FSSAI, has officially stepped in following a massive wave of viral social media complaints. First, KFC India facing intense scrutiny after the regulator issued a formal notice, tracking major hygiene issues flagged by the customers. But with this, Sapphire Food India and Divyani International stocks are not much affected in the today's market session. And second, Nestle India hit with a notice following the shocking suspected detection of live insect and larva inside a Maggi instant noodles packet. With this news, Nestle India share price down over 3.3% today's market session. Next, FSSAI has also extended its investigation straight into online retail channels. The authority has officially issued notice to Flipkart and one of the health brand Open Secret. This specific action follows widespread public consumer claims regarding insect found inside packaged date products purchased online. There are many more videos on social media related to these consumer goods, from misleading marketing and using dangerous preservatives for product taste and quality. My opinion is FSSAI to look on that things also. Yes, it's not good for stock market, but it's good step for public health. Next update is from Tata Motors. Tata Motors Passenger Vehicle Limited has officially announced a upcoming price hike across its passenger vehicle lineup. The company will increase the prices of its passenger vehicle by up to 1.5%. This new price revisal will take effect from July 1st, 2026 onwards. Tata Motors said that The hike is directly a result of continuously rising input costs and ongoing inflationary pressures, which have made manufacturing more expensive. This timely price hike is a strategic move to protect the company's profit margin against rising commodities expenses. With this news and along with overall positive sentiment in the market, Tata Motors passenger vehicle share price rised over 3.75% today. And there was big move we have seen in MTAR Tech share price today. Shares of MTAR Technologies suffered a brutal 11% crash on yesterday, 11th June, only to stage a speculators 11% recovery the very next day on today's 12th June, rising back to around 7,119 rupees per share. The main question is, what caused this insane turnaround? Here are the two main reasons. The initial panic started when reports claimed a massive 1.8 gigawatt data center project had been paused because this project uses fuel cell from Bloom Energy, a critical US client that drives 55 to 65% of MTAR Tech's annual revenue. So investors feared a massive hit to MTAR's order book. Black Hill Corporation clarified that the mega project is not paused. Development activity is moving ahead smoothly, and the project is fully on track to begin services in early 2028. And the customer has already injected over $240 million in refundable contribution towards construction milestones. The second triggered that restored massive investor confidence back directly from top management. In an exclusive interview with CNBC TV18, MTAR Tech's managing director Srinivas Reddy completely dismissed the negative news as purely speculative. He confirmed that the company has received absolutely zero communication from Bloom Energy regarding a pause, saying clearly, there is no delays as far as we are concerned. We remain completely on track. With the data center project firmly on track for 2028 and management aggressively shutting down rumors, big institutional money rushed back into the company. And one more interesting thing is this MTAR technology share price rised over 200% since last 6 months. If this company shareholders are watching this video, please let me know in the comment section. Guys, if you think this video is informative, then please hit the like button right now so that I get motivation to put more efforts on making these videos further. And another two company share prices rallied today. Shares of HFCL and Sterlite Technology both rallied up over 5% on today, completely breaking a painful 2 days losing streak where both stocks had dropped over 8% each. According to market data, this sharp reversal was triggered by three major reasons. First, global technology and AI-linked stocks rebounded sharply, claiming recent investors fear that the massive artificial intelligence rally was running out of steam. Second, global oil prices slipped down to a comfortable 2 months low, while easing geopolitical tensions injected an extra dose of optimism across equity markets. Third and final reason is India's booming data center industry, rapidly fueled by digitalization and surging AI demands, is creating a massive long-term opportunities. The buyer's momentum was incredibly strong today. Sterlite Tech share price gains over 5% to reach a base high of 600 rupees, and at the end of the day closed at 3.2% gains, while HFCL shares were completely locked in 5% upper circuit today. And today City Union Bank share opened at 23% downside. This share crash reason is mainly 1:3 bonus share issues. Because more shares are entering the market, the prices per share automatically drop to balance it out. The decline is purely a mathematical adjustment, not a real crash. Yesterday closed at 256.8 rupees per share and today opened at 197.4 rupees per share. Remember that it's purely an adjustment, not a real crash. Another update is related to growth expansion. Hitachi Energy India Limited is making a massive growth move to supercharge India's electrical grid manufacturing sector. The company has committed to invest a massive 2,000 crore rupees. This huge capital deployment will go directly towards constructing a brand new large-scale power transformer factory located in Vadodara. As India rapidly expands its renewable energy capacity and upgrade its nationwide power network, the demand for heavy electrical transformers is hitting all-time highs. This mega factory will significantly boost local production capability. A massive 2000 crore expansion like this is a solid long-term growth positive trigger. It shows incredible revenue visibility and establishes Hitachi Energy as a key leader in India's heavy electrical machinery boom. With this news, today's stock price rised around 3.3%. Next update is related to merger. Orchard Pharma has officially secured a massive structural upgrade. The NCLT has formally approved its merger with Renuka Laboratories. This newly unified company is setting its sights on some high aggressive financial milestones. The combined entity is officially targeting a massive total revenue of 1400 to 1500 crore rupees. One of the operational side, the strategic integration is designed to heavily boost efficiency and margins, aiming to deliver a core operating profits or EBITDA of around 200 to 250 crore rupees. With this news, Orchard Pharma stock rised over 8.4% in the intraday. So those are the important updates you need to know today. We'll meet you right here in Monday's pre-market video. Have a nice weekend. Signing off. Bye bye. Jai Hind.